Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line, Chief Strategist at T3 Live and T3 Trading Group, on this busy Monday morning. Scott, how you doing?
Doing well. Just trying to get myself ready for, like you said, a busy Monday morning with some welcome volatility, I actually think.
Yeah, for sure. And I was just going over, your morning note here, and what I noticed was is like you're very definitive in what you want to do. I mean, you got your points picked out. You know where you want to buy. You want to sell. I mean, with the volatility in this market, 2150. How long did it, just going back over the years in your trading, how did you get yourself to be, so comfortable with your levels and to take your spots? I think it's something that our traders can learn from.
It takes a long time. I'll be honest. I've been doing this since 1998, and I'm a work in progress every day. But one thing you have to do is just be prepared. You have to get up early. You have to go over your charts. You have to write down your levels. You have to know what they are. You have to have them in a way explainable in front of you. So this way, if you do hit those levels, you see if they're actually definable and viable and actionable. So like you're saying, like I come in and I have, levels that I'm going to watch and go with. They're just levels to potentially, have action with. So if you have the potential levels, at least it's half the battle. And the other half is figuring out if the market cares about them and if it's worth you, acting on them. Because like last week even, remember, in the S&P, we broke above that descending channel. I think we talked about that, in one of the pre-previous Mondays when we got about 2115 in the S&P. And right there, if we would have went sideways and held above it, after post-Fed, market looked good. Like there could be momentum. And all of a sudden, you had that one day, that engulfing down day on 624. I was like, oh, okay, maybe we're not that strong. And then literally on 625, when we lost the 8-day, when we broke back below like 2110, I'm like, you know what? We're weaker. There's no momentum. I'm not going to have risk on. And I also was in, Colorado for a 7-hour withdrawal. But anyway, got stopped out, used those levels when we broke below the prior low there, which was, I was like 2108. And I said, I don't like the way things look. The Russell's in the middle of a pullback. The bios are in the middle of a pullback. High beta tech's not giving us any clues. We're coming to a head with this whole Greece scenario. China, who knows if they put a weekly low in. So my process has me out of risk when we break below the 8 and 21 day. I have to follow that process. It's been a little frustrating this year because we've traded below those, moving averages, and then within 2 days we've been back above them. So you've had to risk off, risk on, risk on, risk off. But one of these times it's going to save you a lot of money, and this down open, I really have nothing on. So I'm going to be in a position to embrace the volatility at levels that I have mapped up if the market, holds them.
Okay, so let's move into some of your specific plays here that you're looking at. And one of them that you have here, I know you like to play that IBB. What are you looking at in that today, the biotech index?
Okay, well, the biotechs broke out. If you remember that big wide range
Yep.
bar back on June 18th, okay, then it extended. Into that extension, we were very extended from the 8 and 21 days. So the question was, how would it pull back? And then it broke 379, and that prior breakout was 374. So last week I tried it around 374, thinking maybe it holds that prior high, but we would have to be in a very strong market, and it didn't. So I got stopped out there. So with today's down move, okay, the 21 day is right at 367.55, and that's right where we broke out from. So this morning I will see if I could be a buyer of the IBBs around 367-ish. And the 50-day is at 360. So I think if today is contained and we see the low of the market in the first hour, we probably hold 366 to 367.50. If we open down 220 points in the Dow and no relative strength comes back to the Russell or the bios or even some tech and some names, then the 50-day has to hold, which is also a trend line, and that's around 361.
Yeah, that area, that IBB chart, I mean, that area was so well defined, that resistance at the 367, 368 level finally broke out, now coming back down to it. So it's kind of a text textbook old resistance, new support. But got to have your outs if that support doesn't hold. Looking at under that 367 area, Scott, you did point out some areas at the 50-day moving average. Russell rebalance was supposed to be a big event on Friday, but really didn't turn out that way. Were you in the mode to play the imbalances, or give us your take on the activity from Friday and follow through in today's session?
Yeah, I don't really play the rebalance as well, just because there's so many unknowns. I like to be in control. Plus, just on this one, I happen to be heading into the mountains of Colorado after speaking for a conference at Schwab. But I was watching it from afar, and I was trying to figure out if, the prior peak from, April 15th, which was 127.13, were to hold. So it briefly traded below that and came back above it, but it still didn't look good enough for me to swing into it. So today, I will see if it's buyable. The IW on 126.82, I believe we're a little below that. So, but the 21 day comes down closer to 126. So I think, if the market's gonna hold today and come off those lows, you'll see that level in the IBB hold, and then I think in the Russell anywhere close to 126 needs to hold. And if both those levels don't hold, chances are, in the SPX, if you want to put that up so we can talk about it, then chances are that 2072 area, which we've played a lot a few weeks ago. Remember those two little the double bottom that happened at 2072, 2072. So in my mind, that 2072 can hold if the bios and the Russell hold both those levels. If those levels don't hold, chances are we can go back to the overnight lows, which we saw in the S&P, which was a little bit closer to 2000, below 2060. So that's kind of my thought process. And then overlay the banks today that gave a few faulty signals. You would think this 2460 to 2470 in the XLF needs to hold. I reduced my bank holdings when Goldman was downgraded in the city. That was last week. So in order for the market to hang in there, some strength has to come back there. If strength doesn't, then again, we could have a trend down day. So those are really the three top sectors I'm looking at as far as sectors besides stocks.
Let's just talk a little bit about the XLF and the financial sector here, just in view of what's going on overseas with Greece. I mean, I don't think many of these banks have huge exposure to Greece per se. I think they kind of been lightening up through 2012, but the financial sector kind of had led us on, had been the leader. It took us back up to all-time highs, just showing strength here. Now is this something to be concerned with here? Now that the leader are starting to pull back as well. I mean, that was took us back up to all time highs. What's your take on that?
Exactly what you said. I was trying to be long some of the financials on 624, which was Wednesday of last week. Look at that potent down move, traded right below the 8-day, and that was I think the day that Citigroup was and Goldman were downgraded. So on that, I saw them closing the lows. I'm like, I'm going to revisit. Sometimes I'll wait to the 21-day, but if the 8-day breaks, that means upper momentum has broken. And if you're an active trader that tries to hold things when there's upper momentum, it broke right there. And then you had a little bit more follow through as it traded below the 21-day and didn't bounce off of it so well. So right there, those were your two signs that some momentum in the key strongest sector was waning. So, and now the question is, besides momentum, is like more intermediate money leaving or staying. And I would think intermediate money would like to see the 50-day hold, and that's a little bit closer to about 24.90. So, we talk about time frames, momentum time frames, which is also active, and then you have intermediate, and then you have macro. So, if you look at Europe now, just on a macro time frame, okay, everyone's saying what's going to happen with Greece? Is it going to get worse? Is there going to be contagion? We talked about how if you put up the HEDJ, okay, that lost its momentum, in late April, early May, when it lost the 8 and the 21-day. That was around 66.50. So that was when momentum left Europe. Now the HEDJ is trying to hold above the 200-day, which is around 62, 62.50. So now the question is, are we that weak, or is that weak where they're that concerned? So I'd watch 62.50, and that'll give you more clues on how concerned Europe is about Greece really leaving and whether or not peripherals are in danger.
What's the symbol that you were just talking about, the 62 even 62.50 level?
HEDJ, which is basically Germany with a currency hedge.
Okay. All right. HZDJ.
No, no, H as in Harry, Edward, dog, J.
Oh, okay. All right. We'll pull that chart up. Well, we got to talk about our favorite uncle, Uncle Carl. Boy, he moved some stocks last week here. Netflix, just as they announced the 7-for-1, sneaks above 700, and then the bottom fell out. I know you'd be kind of been on the sidelines, not shorting the Netflix. Now there's a catalyst there. What's your take on Netflix?
Well, look at the size of that wide range down engulfing bar in 624. Right there, if you've been riding that trend, when he said he was out, you wanted to see if it would affect the stock. And not only did it affect the stock, it gave you an ugly topping candlestick that if you wanted to be short, maybe you shorted versus the top of that, or at least if you wanted to sell some, you got out as it closed on the lows. And then, then it really broke one of its trends when it broke the 8-day. It broke the 8-day when it went and closed below, just say 670. So if you look at since the last quarter's earnings gap up on April 16th, it hasn't been below the 8-day for more than a half a day. So right there, if you didn't sell on that ugly reversal bar, you had your chance to get out around 670. Now, today, if you're still in it and you're stuck, then you chose to be a bigger time frame. So anyway, Friday's low is 651, and you do have some bigger. There are two levels of support I'm watching to see if there's a trade. One at around 633. That's where one of those pivots it broke out from, and then you have your next spot doesn't really come in all the way until about 621. So right now it lost its momentum. It's just a chop trade. It's got to build a whole new pattern in order to get traders holding it with any kind of comfort. So at this point, I would just map out points of reference. And right now you do have the 21-day. That's actually 642. 642 is a 21-day, which it hasn't visited or touched in quite a long time. So that's worth looking at to see if there's some support there today.
And he said Apple represented the same opportunity to him as Netflix did when he bought it around 60, 70, 80 bucks. Boy, I don't know. That's a hard one to swallow.
I got along that day. It acted well, right? It traded above 127.60. Figured people wanted to know whether or not he sold that stock the same way Netflix was sold, and it acted well. It peaked out, and then it sold off pretty hard in the last hour or two. But so I took a little bit home with some skepticism. And then if you look at the day after, Carl said that after being in every newspaper around the world and it couldn't hold, that told me you got to get out of Apple. It was showing relative weakness before then, and below the 8-day, below the 21-day, not holding strength. So for me, the day after Carl, I was like, I'm done with it, thank goodness. And then Friday showed some weakness, and now it's gapping down. So sometimes, obviously, you want to look to the biggest leaders in the world, and Apple obviously is one of them. So, we could judge today's weakness and how we might do based on, a little bit of where Apple could hold. So you look at 125.60, that's one level. Okay, if Apple can't get back above 125.60, you really have another spot at 123.36, and then big support, which I think is important support, comes a little bit further down at 121.63. So 125.50, that 123.60, and then that 121-ish area. So, map out support 1, 2, and 3. That's key to today's action on where we could hold or not to gauge today's trading versus opinions.
All right, one final one for you here. Facebook, really, considering how the market's come in, that's still holding up pretty well. Any thoughts on Facebook in today's session?
Facebook's definitely worth a look. It's the best leader, best in breed. Broke out, was very extended from all the moving averages, but you had a really nice clean move. It was up 1, 2, 3, 4 days. My system is you want to buy day 1, add day 2, and then sell day 3. If it happens to go up day 4, day 5, big deal. You're out of the way. You're away from risk. So today, it was a little bit lower. The prior breakout high is 86-ish. So I would think, if Facebook wants to be a true leader and act really well and want to be in the game for new highs at some point, I would say let it hold 86. But sometimes Facebook likes to shake everyone up. So, even if it was a little bit below there, I'd say 85 and a quarter-ish is a spot. So that's something to look at. Facebook is probably one of the best candidates out there to buck the trend. And if it can't buck the trend and starts to break and close below 86, then I think, some people would start saying, wow, this correction might have a little bit more, teeth.
Okay, and final words of advice for our traders here going into the open. Sounds like you're looking for more buy setups than sell setups with the S&Ps trading down 20.
Yes. I'm coming in with risk down, and thank goodness, my process kept me safe. Sometimes my process has kept me frustrated because I've reduced risk where you didn't have to, but as long as you follow your rules and your process and you keep following it, you're going to be able to stay the course. As far as say, if you're in positions you're not married to, you have no conviction with, and it's controlling your mind and your day. See how they bounce in the first 15 to 30 minutes, and if they don't, and they take out the morning low, you could always sell, get your head clear, and revisit. As far as everyone's opinion out there on Greece and on China, there are opinions. And we let the moving average to tell us, what's valid and what's not about those opinions. As far as the volatility today, if you're, thinking clearly with mapped out levels, you can embrace it, and chances are, there's probably more viable opportunities into today's down move versus, I think, pressing shorts. But it doesn't mean you go all in at one level. You let the level get established, trade versus that level, and then you look at the landscape to see if there's any relative strength to support. And if there isn't, you get out of the way when it breaks that level, and then you test another one, take a little paper cut. These type of days, it's better to take paper cuts than to have gushers, because gushers could either put you in the hospital or get you out of the business.
Okay. Trade your plan. Scott Redler, Chief Strategist at T3 Live and T3 Trading Group, joining us every Monday to give us his outlook and setups for the market. And man with a plan, Scott. I really like to hear your ideas. Thanks for coming on. We'll speak to you again soon.
Hey guys, if you like hearing Scott's daily take on the market as well as key levels, subscribe to Redler All Access and get Scott's morning note, private Twitter feed, and daily video. Call 1-888-998-3548. Again, that's 1-888-998-3548. And mention promo code REDDOG for $101 off the regular price. There's also a link in the chat room that you can click on.